2. Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. I love talking to authors because they have the courage, and I underline that word, the courage to take their thoughts, their stories, their lessons, to put it down in a book and share it with the many, ultimately changing their legacy and destiny in the process. And if you're an entrepreneur out there, I highly recommend you read a book. The self-awareness aspect is going to be insane, in addition to the opportunities that come your way. So if you need help, check out dreamstarterspublishing.com. And if you already have a book that's already done, you want to use it to grow your business, check out bookmarketingcrm.com. The book that we're talking about today is perfect for anybody who's looking to start or grow a business, because I believe one of the key ingredients to success is having courage. Having courage to put your thoughts out there, your stories, your life, your personality on full display, but also the aspect of financial literacy and understanding cash flow. So this podcast is perfect for you because it combines both of those. The book that we're going to be referencing is called The Courageous Entrepreneur: Cash Flow Strategies to Build Resiliency in Your Business. And we have the author with us today, Renette Lagasse.
The
Lagasse. No,
case.
I'm sorry. I was thinking about it. I was thinking, which way is it? Renette Lagasse. Thank you so much for being here.
Thank you for having me. I'm really excited to join you and find out more and about what you're doing and all the different people that are out there that love to know more about how important it is to be that courageous entrepreneur, and which is the name of my book, The Courageous Entrepreneur. And what I focus on is building strategies to build resiliency in your business, which is basically focusing on cash flow in your business.
Got it. Got it. So give us a quick little background on what got you to this point. Like, where do you come from? What made you fall in love with entrepreneurship, capitalism, freedom in general?
Well, that's been basically the whole lifetime of my business. And as a bookkeeper, a certified professional bookkeeper, I've worked with so many different entrepreneurs and I've seen so many great businesses succeed, yet the same type of business across the street is struggling. And it really drove me nuts as to all the silly little things that took out a business that could be changed, and little simple things change just slightly that made all the difference in the world for that business. And so my whole book is about all the different things I've run into that really hurt a business and how they can fix that or avoid that from happening in their business.
Nice. Excellent. Okay. So we were talking a little bit before we hit the record button, but people think cash is king. I truly believe cash flow is king. And cash flow, to me, I mean, in order for it to happen, 2020 really woke me up to my limitations with one revenue stream. And when one revenue stream goes down, you're in trouble if you only have one. But if you have many, then you can sleep better at night. So it was because of 2020 that I implemented many new strategies focused on CRM building, software, courses, masterminds, really taking a book and making it a real business on the back end. So it was sort of a blessing in disguise that showed me my weaknesses. And so I focused on cash flow, which then it's really about buying or investing in assets or creating additional services that are bolt on, that you can bolt on to your current business. So that I thank, some of the dark days of 2020 to expose that to me. But when it comes to this aspect, what is it about most businesses that they struggle with? Is it because they are maybe over leveraged, or maybe they neglect the cash flow statement? They're looking more at the balance sheet. They're taking on debt. What is it about the average entrepreneur that they struggle with this?
The biggest thing that entrepreneurs struggle with is that they don't understand financials. They don't understand what the bank needs so that they can get that loan during those difficult times. They're not aware of when those cash crunches are coming, and they don't plan for it. They have no idea what to look for. They are really good at their craft. What they do is what brings them the money, and that's where they are really amazing at. And that's where they're able to bring in money. And a lot of people treat it as though their bank account is what they are paying attention to. So they see money in their bank account and think, oh, yeah, great. I got all this money. I can buy a truck or I can do this for my business. But yet they don't realize all the other expenses that are coming or due or outstanding. They just kind of don't pay attention to that as much. And they're not aware of it
Hmm.
closely. And I find most people just go by their income statements. Their income statement just tells you basically how well you're doing. Are you making money? Are you like, spending too much money? That's a great tool, but that's only one part of the whole toolkit. Your cash flow statement is really important, but majority of people, even accountants, sometimes do not understand a cash flow statement properly and are able to explain the differences on the cash flow statement or your balance sheet, which your balance sheet is what the bankers want. Because the balance sheet tells you what you owe, what you own, and how much money you have to leverage and work with. That's what they go by. They don't care what's on your income statement.
Yeah.
So there's just a lot of moving parts there. And a really great bookkeeper or accountant who can explain what to look for and set you up in systems to help monitor though that for you. That's the key. Those are really, really important keys.
Got it. Got it. Now, in chapter 1 of your book, I think it's 1.2, it talks about growing too fast. And as soon as I saw that, I'm thinking of many things I've been told by my mentors. And what I've realized is that many people want to just keep growing, 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 get more leads, but they're not fixing maybe the standard operating procedures or making it scalable along the way. So eventually there's a breaking point, a bridge out up ahead. And what I realized, and I think that one of my associates slash clients, Tyler McBroom, always told me is growth sucks cash. And I tried to avoid that in every way possible. But I've realized, and maybe I'm doing this the wrong way, maybe it's the right way, maybe it's the most efficient way, but growth is taking 2 steps forward, 1 step back, 2 steps forward, 1 step back. So you test the limits, you figure out how far you can go, you figure out your weaknesses, and then rather than keep pushing and doing things the wrong way, you correct all your mistakes, but you might be hurting the bottom line to a certain extent, but you're making the business almost like in the Forrest Gump movie where he breaks off the chains, where you could start to run a
Yeah.
little bit more freely. So growing too fast, I think, is a major problem. And that usually means, well, 2023 was amazing. It's always going to be like this. But then 2024 hits, and I noticed how everybody just like the engines turn down, the economy takes a hit. And maybe they're doing the exact same thing, but nothing's working. So they should maybe reap the rewards of this blessing and say, let's fix the business the right way. So when the economy comes back, we are humming on all cylinders. So what can you say about growing too fast?
Well, I actually have just been working with two really large companies recently who just grew really fast. So, like you said, all those systems were not in place because they're like, wow, this is great. Let's just do more and do more of this. And
Right.
oh my God, they were so much at risk. There's so much liability there. There was no proper contracts. There was nothing to protect the company should something go sideways. And one little thing can take a company out in a bad way due to, I don't know, liability of some sort or some type of risk, or they just didn't have the systems to support the growth. Now, one of the things I do with my clients is I specifically work at a plan. So let's see, can you afford to grow right now? And how much can you grow within your framework you have now? Like if you only have so much, like say $500,000 available to use to grow, and you want to grow X amount, like maybe 4 times what you are doing right now, can you afford to grow that much in that time frame, or do you need to borrow some more money to make sure you have the people, the systems, the equipment, the inventory in place to do that? And is there a demand? Like you said, here comes 2024 and we're like, whew, a lot of the companies are not able to keep up with, they are all have all this inventory now, they have this beautiful warehouse full of stuff and all their money stuck in it. And that's where a lot of growth can kill a person, when they anticipate too much sales and don't have the sales to back it up. And
Bingo.
it's hard to anticipate how much inventory you should have on plate, like on hand, or, and there's always these different ways of measuring your inventory to make sure you just have just in time inventory, or you're planning for certain events, but you don't want to over plan and just be like pie in the sky. We're going to make $5 million next year. That may not happen. So yeah, there's definitely a lot to growing too fast. And it's been really interesting watching that process, because it's a lot of work to get the systems in place. And you need those key people to get that done for you at the ground level before you start growing. So make sure you've got the basic foundation built before you start building the rest of that house.
Yeah, I would assume that it's pretty common for some entrepreneurs to be solo entrepreneurs and they do really well. Maybe they'd make $200,000. And so they're doing everything themselves. They don't have that much time freedom, but they're doing okay. And to go from solo entrepreneur to the next level and hiring multiple
Mhm.
people, now you are, maybe you've been an entrepreneur and doing everything for 5, 7, 10 years. Nobody's going to come close to how well you did it. And letting go of control and then giving people the ability to start to skate or ride that bicycle, and then allowing them to make the mistakes so they can take the training wheels off takes a little bit of time. And I
Mhm.
realized that a lot of entrepreneurs were so afraid of giving up control, they stay at that certain level their whole lives. Comfort will
Yeah.
eventually come back to kill you. And that's the way I look at it. So you better do it whenever you feel like, man, if I stay here, the storm's going to get me. So I better keep moving, even though it's going to be painful at first, it's going to pay off. Do you see the same thing when it comes to entrepreneurship?
Absolutely.
There's a courage that's required at every stage, going from 1 to 5 to 10 to 15 to 20 million. Am I right?
Absolutely. The courage just to be able to trust someone else to do the job for you, and being able to know that they will be able to do it the way you want them to do it. Now,
Hmm.
let's be honest, nobody's going to work as hard as you as the owner.
Right.
You know what you want done, you expect certain things. Your employees and staff will not be at that same level. So you need to encourage them, you need to empower them, you need to give them the tools and the knowledge and the experience and the time to grow to be that person for you. Now, every business I find that are trying to grow, they get stuck at maybe 2 to 3 employees. And if they don't stick it out and get those systems in place, they will shrink back to 1 or 2 and just becomes like a solopreneur, basically have their own job for themselves. So making that big jump from being a solopreneur and just creating a job for himself to an actual business where you're just running the business and the people are doing the work for you and with you, that is the hardest leap for a person doing that. And I think that's where a lot of people kind of get stuck. Now, it takes a lot of support for them to be able to let go. But that is, again, all about the systems. Are they in place? Do you have the training there for them? Do you have the backup? Do you have backup for yourself so you can take a couple of weeks off? Now, that is one of the biggest tests for any employer or employee, or basically to be able to cover your boss while they're away for an extended period of time. If you know you can go away for 4 weeks and your company still makes the same amount of money, that's when you know you're successful.
Bingo.
Yeah, that is such a key point that people need to work towards.
Whenever I'm telling you, it was 2020, I actually think it was, that I went away for a week or 2 weeks, somewhere in there. And I let my project manager slash assistant at the time to just kind of handle everything.
Yeah.
And I remember like thinking to myself, oh my God, did she have it? Did she got it under control? And I was like checking in with her and she kept saying, I got it. Quit. Enjoy your time in Texas and enjoy your trip, all that. I got it under control. Letting go, though, it was so hard for me to do. But I'm telling you, the buy-in from her, because I gave her the freedom to kind of run things without me,
Yes.
it was tremendous. So you got to let go. And it's maybe you have to have a certain period of training, right?
Mhm.
And then give them your faith that they're going to to
100%.
to swim without you. And the rewards are number tangible and intangible. It's incredible.
Yeah, it's just about empowering them. When you empower your staff, they will step up for you because you're saying, "Hey, I trust you to do this, and I want you to do it this way. Let's try it. Let's give it a go. You do little trials where you go away for a couple days, see how they do. Oh, that didn't work out. Let's fix it and see where the holes are. When there's a step missing or the system is broken, that just means there's something that's not 100% in place. So that's an opportunity to fix a problem. So all these challenges or bumps along the way are opportunities to improve your systems, opportunities to support your staff better, opportunities for your business to become a better business.
Love
So
it.
I love those challenges, and I love empowering my staff, and I want them to try and figure out. I don't want to give them all the answers. they have some amazing answers for us because they come at it from a different perspective. So they are be able to give us so much more information if we're open to hearing what they have to say. They're the ones quite often facing the customers every day. They're the ones hearing the complaints, the issues, the concerns. So they can share that with the owner and they can come up with some really great solutions. And when I do that and say, well, what do you think should happen? Simple question. How do you think we can change it? How do you think we can make it better? They come up with a solution that I totally may have not even thought of, which is amazing. And I think when you do that, you they feel like you trust them. They see and feel the faith in them, and they will do more of that for you. They
Mhm.
become that valuable employee, the valuable person, and that allows you to do more for yourself, for your family, have more family time. Yeah, but letting go and trusting is fantastic. I love this.
Yeah. And so when it comes to creating positive cash flow, chapter two, I mean, there are many things that you outline there. And one thing that I've thought about over the past couple of years is, rather than try to serve more clients, just serve clients at a higher level, which could
Mhm.
free up your time and obviously create more buy-in from the customer, right? If you solve their problems at a higher level, you are going to get more referrals and testimonials, but also it's not about just going out there and trying to find new customers all the time. It's finding a tribe and serving them. To me, that helped us out tremendously with our cash flow. But you also
Mhm.
have something here. I don't know where you're going with it because I've not read your book, but the paradox of choice. So wherever you want to take it, I just want to kind of highlight chapter two of creating positive cash flow, of what people should focus on, and that paradox of choice that you outline.
Okay, well, that's a really good point to bring up, just because I find that with people who they're so good at what they do, sometimes they forget to slow down and explain or ask the question, what is it you really need help with?
Mm.
Identifying what the real problem or real solution that they are having. When we just come in and just solve things because we can see it and we know, oh, you need to do this, this, and this, and we're not hearing where the real problem is, and maybe we're not solving their issues. But when we're able to just sit there, talk to them, find out, okay, what's happening for you? What's happening in your world? What is creating you the most headaches for you? How can we fix this problem for you? And if you're a plumber and you're just hearing knocking at night in your water pipes, but you're not sure where it's coming from, but that's creating the most headache for you. There's no actual water leak, and you're thinking you're coming there to fix a water leak, and everything's fine, and you go to leave. But when you stop and talk to them, what is creating the biggest issue? Oh, it's knocking. Okay, let's dig a little further. Maybe there's something with the pipes. There's an airlock. There's something that's possibly an easy fix, or maybe it's a more complicated fix. We need to spend more time just asking questions instead of providing the solutions. Now, the paradox, I haven't really thought about that one in a long time, which is
I
really
was so
cool.
fascinated with that phrase. I'm like, what is she talking about here? But I had an assumption of what it meant because more choices usually you think is good, but in the sales world, it's actually
Mm.
much it's bad. So that's where I
So
thought you were going with.
that one in particular is sometimes we do too many services and offer too much, and then we spread ourselves too thin. I have a perfect example with myself as a bookkeeper. I started doing taxes, I was doing bookkeeping, I was doing controllership, and not all my staff could do all the things that I was doing. So I was doing it all still, which was not helpful for me. I wasn't able to take time off, and I was not making more money. I was just kind of spreading myself over 7 days a week instead of only 5 or 4 days a week. So when I looked at my business and I said, okay, well, what part of my business is making the most money? Well, 20% of your business usually makes 80% of your income. So when you look at it that way, well, why don't we just focus on the areas of the business that's making the money and let go of all those little nice to dos? As much as it's nice to understand taxes and bring it together, that is not my specialty. Why even bother go there? Yeah, I can do it. I'll do it for small businesses, but I don't do it for corporations. And I'm glad I did it because I know what to expect and what accountants need so I can support them better with my clients. However, it was about changing the way I was doing my business so I can support businesses in a more productive way, more efficiently, and I can actually specialize in it. So sometimes specializing instead of doing everything is far more beneficial. And then you can focus your services and giving great service at that level.
Mm.
So for me, I think that was part of it. Um,
So niche down,
yes,
niche down and
yes.
become the true expert in that field or the authoritative figure in that one area. Like you
Mhm.
said, bookkeeping is very different than CPA. Bookkeeping
Mhm.
is
Yes,
keeping everything organized. Therefore, you can hand it off to the accountant and then they can maybe give you some guidance. But yeah, what I've realized is a personal assistant has changed my life, but also having a bookkeeper, having things clean week to week. Oh my God, does that feel so good? So yeah, quit trying to offer too much to too many people.
yes. That'll just take you right out. And honestly, when you become more valuable like that, because you're able to really, like, say, niche down. So you've got expert skills at a certain thing with that specific type of business, then you can actually offer far more advice, support, consulting. Say, hey, this is a red flag. You need to go talk to an insurance agent about this. Or, hey, this is another red flag. You like just knowing when they need to get more support is actually so valuable as a person in my position, knowing to when to tell my client they need more support in a different area and what that could look like and the difference it could make. Maybe they need to see a lawyer. Like, we need to get this incorporated. You now at that point where now it's time to switch over from a solopreneur to incorporation because you are so much bigger now. When is that line? Where does that come in? That is so important to know. That's just some of the aspects that I provide for my businesses.
So you have this phrase here, and there's the more I became aware of who our perfect target client was, what they did, who they were, what they were struggling with, it was so much easier to market. It allowed my team to really help them because there was a certain common ground. We could speak their language. We kind of knew the customer journey, their own journey a lot more. So it helped me to really get specific with who I wanted to work with. And a lot of people thought I was insane because they're saying, wow, with your political beliefs and what you stand for and what you're putting out there, you're really turning off the faucet for some people. In my opinion, it got buy-in from my team, but also my clients. And so in chapter 2 of your book, you talk about value the difficult customer or client.
Mhm.
And so it made me think of some of the difficult ones and there's two ways to look at it. Maybe the difficult client is exposing something that you could really emphasize and get better at, or maybe there's something that you are doing that's attracting the difficult client. So what do you say about this one?
Well, I think our target market is so important to really define. Who do we want to work with? We want it to be a successful relationship for both parties. We want to be enjoying our time when I do work with my client and vice versa. And I want to feel like there's value for that client. If that client it doesn't feel value from me, then it becomes very difficult, the relationship between the two
Mm.
of us, because they're not seeing the help that they believe they need or think they need or what they're looking for. And I'm not meeting their needs. So we're never going to meet the needs of everybody out there. So why try to force it when you get a difficult client? They're saying you're not meeting my needs, or I need something different, or maybe maybe they're just not the right fit. Maybe personality wise, we just don't want to hang out together afterwards or anything like that. And that's fine. Um, but difficult clients are bringing up a concern or an issue that with my business where maybe either I'm missing something, I need to learn something more, I need to change what I'm doing. They're giving me an opportunity to improve my business. That's what a difficult client does for you overall. But at the same time, if they're a difficult client, maybe we're just not meant to work together. And that's great. Isn't that great to get rid of the people that you don't want to work with and just really nail down or niche down, like you say? So if I just want to work with dentists, that's awesome. I know what all the quirks are in their businesses. I know what they need to know to have the proper life insurance or type of liability insurance or anything, just specifically to their business, because certain types of things do not apply to everybody. So why try to be the right fit for everyone? You never will be the right fit for anyone. And that's where I'm not a Walmart where they want to have everything for everybody. A specific type of business that will support businesses that need this type of supply, like cash flow advising. That is what I focus on. That is my goal. That is where I will shine and support a client if they're willing to work with me.
Yeah, and
That's key.
I
Yeah.
I guess I would love to hear your thoughts on, there's the way that a lot of these guys that I work with, we always talk about slow money, medium money, and fast money.
Hmm.
And there's too many people out there thinking, all right, if I'm going to become wealthy, all I have to do is worry about slow money. Well, you really need all three. All right. So when it comes to real estate, there are people who
Mm-hmm.
focus on fast money, which is wholesaling. And then there's the medium money, which might be house flipping. And then there's the long-term money, which might be investing in multifamily. Case in point with our business, right? So uh we have these books that we publish for entrepreneurs from start to finish. And
Mm-hmm.
they could start off at 3 to 12 to 18 to $20,000. And I look at that as the fast money, but that's a one-time sale. And then there's the long-term money, which could be either medium or or slow money. And that is the recurring revenue. So it's a little bit each month, but it can be a little bit from everybody, but we can have thousands of people under the umbrella. And I think you need to have all three for it to be a smooth operational business. But when it comes to cash flow, I guess maybe the thing is they get blinded by, oh, this is an opportunity. I better invest all my money into it. And they forget about that there are three buckets that you need to keep your eye on at all times. And so, in my opinion, you need fast and medium money, and you have slow money on the back burner. That's how I look at it. How do you look at that?
I never heard of it put that way before, but it totally makes sense because you're what that does is create longevity for your business. You have money coming in right now to deal with everything that's happening right now. You have little bits of trickling money for later on, and it keeps growing. That's fantastic. So that is a really great way of looking at it, and I've never put it in that fashion, but I think um, longevity is what resiliency is. That's what I talk about is long term. We want to make this work for long term. We want to make sure we have money 5 years, 10 years, 20 years down the line. We also want to know what is our goal? Do we want to grow? Do we want to shrink? Do we like we have to plan a lot of this. So the different types of money coming in at different times, I think is fantastic because it just provides like a safety net also
Mhm.
for you. It just keeps cash flow coming in at different levels as long as you're ensuring that you've set money aside for the times that you're not getting the big fast money. Because there's people will get like $100,000 this year and go, woohoo, I'm going to make 500 next year, and they only made 50 or 30. And so now they went out and put all that money down onto maybe a new house. And now they've got a bigger mortgage and they don't have the money coming in to plan for that, to pay for it later on. So the goal with cash flow is okay, you've got a lot of money right now, set it aside, make sure your regular stuff is paid for all the time, and you just build up those little savings on the sides for different pockets. And you have that emergency fund for those down months. Do you have that in place for, next year? What if? So what is your what if account? What is that number that you need next year if things don't work out? Do you have that number? What is your basic number? And all those different sources of income coming at different speeds, are they going to, do you have that income coming in? Or is it like, I guess what you're saying is like, depending on your business, you talked about the housing market and that, which is really great because there's like the flips and all that make fast money sometimes.
Yeah, could be.
But
Yeah, it could
sometimes
be
that,
6 months. Like the wholesaling
yeah,
could be a weekend, but flipping a house might be 6 months. Investing in real estate for single family rentals, that's not wealth overnight or within
that's
six
a
months. That's like
long-term
that's 10
plan.
years, right? Yeah.
Yeah, totally. And I love that. So I think it's important for businesses to look at what sources of income are bringing each level of income into their business. Like, what is the fast money for them? Is there the slow trickle, or is there a plan for that? Like what you were talking about with yourself. You've got other side things like you've got your book sales, your podcast. You've done so much more with your book and courses. That's fantastic because it's just all this education really supports and helps bookkeepers um, and entrepreneurs. I'm thinking of entrepreneurs, but but every day we need that information, and so things change so fast. We need to keep up with the market changes, and there's so much of that going on. I don't know how people can keep up with if they focus on one area of their business. There's no way, because you always have to adapt and change. And what is the market looking for right now?
And the average millionaire has seven income streams, right? Seven
Oh,
revenue streams. And I would say, what is it? 85% of all millionaires are in real estate. Maybe there's a reason for that because it does kind of combine many different ways of making money, whether it's the tax depreciation, or the income from the properties or the refi ability, right? So there's
mhm.
many ways to make money from it. So when it comes to cash flow statements, how often are you looking at them? What do you, in your as a bookkeeper, are you bringing it to their attention? Because the entrepreneur out there who's listening might be running so fast, so hard at their business. They're just thinking, let me just create revenue, right? Create revenue.
Yes.
But they sometimes forget that revenue doesn't always equal cash flow. So, how often should they look at it? What do you recommend for the average listener out there?
Well, honestly, I do recommend that they look at it every week. And the typical business owner will look at the bank. The bank accounts are what they do all their accounting back by. So the interesting thing is, what I love about one of the strategies I use is profit first, where we separate the money as it comes in percentages. So we have a percentage going to your tax account, a percentage going to your payroll account, a percentage going to your savings account. So you're building up an emergency fund at the same time. So there's small percentages, but those percentages will save the entrepreneur so much headache at tax time. That's where I find majority of new business owners will always end up with a huge tax bill that they can't afford to pay at the end of the year. And that really hurts. They can't get a loan for it. It's now too late to get financing just because they're too much in debt and they don't have enough income or cash available as collateral or anything like that, just to get that extra loan to get that. But now you're behind the eight ball. You've now got a big bill that is either paid with debt. So now you got debt to manage as well. It's just really, it just grows and grows. When you get behind that eight ball, it hurts. And I see it all the time. So I find I prefer to work with entrepreneurs who've been an entrepreneur at least once or twice prior to, because they've learned those hard lessons. They're willing to take those extra steps. They're the ones that will be successful because they don't want to end up there again. And
Great
that's
point.
awesome. So, those are learning opportunities. As much as it may be a failure, fail hard, fail fast, get it over with right away, and then learn from it. Do something good.
Yeah, I liked working with people who have started at least two businesses too, because I started four and they were major failures. It was in my fifth business that succeeded, right? Made a little bit of money. And that's when I wrote the book. And then the book turned into a whole new life. So, right, you learn so much from the school of hard knocks that you just can't learn in the schoolroom. But yeah, you realize that you need to focus on the stuff that's maybe not that sexy, that's not that attractive, doing the little things, looking at the cash flow statements, which I think every entrepreneur can get better at. But the little stuff really adds up and it creates these habits that never die. And you have a piece here on make sure I have time for it. But do this if you wish to be audited. What is this?
Oh, I love it. Ignore the brown envelopes that all your government mail comes in.
I
That'll
mean,
motivate
there
you.
was a time when I first started a business that I didn't open
Right.
the mail for 2 years. I'm telling you, I didn't look at the mail. I was too broke to even pay any bills. I just said the hell with it. So that's not a good idea this was back in 2015. So
Yeah. Well, that's one of the fastest ways to get audited because you ignore them. They're not paid. Don't pay them on time. You got to make sure you pay all those government bills on time, your payroll remittances, your corporate taxes. If you don't do that, you're just getting red flags and they're like, oh, let's go pick on that person. They're like putting their hand up, waving at you. That's what you're doing. You're just sitting there going, pick me. So let's not do that.
got it. So open your mail is really what you're saying, but also stay on top of your obligations.
Mhm.
Thank God I was, if it would look like it was from the government, I would hand it right to my accountant. But whenever it comes to like, oh, electric bill, we got 6 months before we need to pay that thing, right? So in 2014, right?
Yeah,
Early, even 2012, back in those days, I was a janitor trying to keep my business afloat. It's so overwhelming to even get to the point where you're opening mail and looking at it without having a heart attack. So the early days are tough, but once again, these are just little habits that you need to stay on top of.
yeah.
Otherwise, like you said, you can catch yourself in some serious trouble.
Yeah, definitely. I mean, most people won't look at a cash flow statement. So let's be real. The way I like to do it is we do the profit first strategy where we actually um, use the bank account to our advantage. So let's make it easy. We don't want to make it hard. We don't want you to have to learn how to read a financial statement to the point where myself or an accountant would know. We just want to make it simple. So we use the bank account accounting as a tool where we separate all the stuff that we have obligations for out of that money. So what's left in your operating account, that's what you see and that's what you have left to work with.
God, I love
That
that.
makes it so much easier. So you know, oh shoot, I don't have $50,000 in the bank. I only have $10,000 this month. Crap, I can't afford that extra truck or that extra. It just makes you think twice before you spend because if you spent $27.50 on a day on random stuff each day, that's $10,000 in expenses that are totally missed each year.
Wow.
And
Yeah, the profit first technique, what a game changer. And when I first read Profit First, I was actually listening to it on the way out to buy a dirt bike for a
yeah.
2 hour drive. And I remember thinking to myself, man, having multiple accounts could be confusing. But when I set it up, it was like, oh, if I could just automate it where a percentage goes into this bucket, and this bucket,
Yeah.
I won't be looking at what's in my account. And therefore, it's almost like Parkinson's law, if you've ever heard of that, where
Yes.
you will give yourself a certain amount of time, and whatever amount of time you give yourself, that's how long it's going to take for you to get it done. Now, apply that to money. However much money you look at and see, that's how much you're able to manage and survive on. So if you take a percentage and put it into the profit first buckets,
Mm-hmm.
you will not see the whole picture. You're going to see what, like you said, the operating expenses,
Yeah.
what's left over. Pay
And
yourself
that's
first, pay your charity, pay your taxes first.
mhm.
What's left over, then you manage that. And that's going to make your life a hell of a lot easier. Am I right?
Absolutely. I just love it. It just makes it so much easier. And every company that I've instilled that practice with, I love it because it's easy for them to understand. Okay, this is my account that I look at. That's it. All this other money that keeps getting moved out of it is a percentage, but they're small amounts and you don't really notice it. And it gets easier because then you know, oh, my money's set aside for taxes, my money's set aside for your sales tax or whatever it is you have that's outstanding or your loan payments. You have that money set aside automatically. I love it. It just makes my life easier and they are clear. Now, if they keep spending the money and not like taking the money out of the account, they're not my client and they're not doing themselves any favor. They are not using any type of cash flow. Oh, it's just yeah, those are the ones that I let go real fast. They're fire them because they're not going to be successful. But honestly, everyone that I've used this with, love it and stayed with it.
And I think that the hardest part for me was really setting it up so it was like 10%, 10%, 10%. And
Yeah,
what I realized was if it's a smaller amount, right? Everything is a muscle.
yeah,
Start very small and
yeah,
then work your way up to the 10%. And
correct.
therefore, you don't you don't have that fear, that scarcity mindset that may creep in that says, "Well, what happens if this happens? And what do I do if this happens?" You start small, and over time, you might get really courageous, pun intended, that,
Yeah.
oh, you know what? Instead of I'm going to overestimate, let me do 40%, let me do 50%. And it might force you to get a little bit more efficient and resourceful with your marketing and with your leads. And therefore, if you have it set up in a certain way, your muscle, almost like your giving muscle, gets stronger, but also your muscle for real accounting and tax preparation and maybe paying yourself first muscle, that
Mhm.
gets so strong that you protect yourself within your business and you stop even maybe losing sleep in the very beginning. So it starts small, just work your way up. Do you recommend that?
Oh my God, that is the only way to start because no one was going to be able to do that, like those big percentages right off the bat. For
Right.
number one, their expenses are still too high. So we do two things. Go in there, we set up profit first, and then we give them the percentages. That we start, like say, 1% over here, 2% over here, like
Bingo.
just little tiny percentages. And every couple of months, we increase it to 3%, 5%. So eventually you'll get to that point. So it's so small at first, you think, oh, that'll never do anything. That won't make a difference. But then when you're seeing that, oh my God, my taxes are paid. I have no stress. I don't have to get more debt to pay my taxes this year. Oh my God, this is fun. This is great. And it gets more and more exciting, like you say. So you start putting a little bit more percentages in there. But that is really cool because that's the start of it. But now you got to work on the other part. Your expenses are this high. Are we able to put more of those percentages? No, we have to get the expenses down first before we can increase those percentages. So we focus on, okay, where can we cut expenses? What do we need? What can we do that's more efficient? Or if it's like efficient in your business and it's worth the extra cost, then we keep it in there. So we go through the entire business and find out where we can save money, where we can stop all those little 27.50 charges a day that are not necessary, that just suck people out. Because it's amazing how many times they go and put things on their credit card and don't even get the receipts or don't even get any kind of backup for all those little expenses. But yet those little expenses can kill a business quietly and silently. So we really get on top of that with them.
Damn right. Tony Robbins has the great quote, and I think it comes from him, that it's not a matter of resources, it's a matter of resourcefulness. And whenever you start doing those percentages like you're talking about, you become extremely resourceful. You start to see all the extra fat that you can cut and
Mm-hmm.
become ultra efficient. I've realized that within my business. So guys out there who are maybe thinking about reading Profit First by Mike McAlowitz, please do because it'll change your
Mm-hmm.
life. And it was his book that really opened my eyes to how efficient you can be even in the intro of the book. I remember Mike McAllowitz saying in the audiobook, hey, I know you're not going to get past chapter 4. So I'm going to put everything in the first 3 chapters for you to know. And I'm like, oh, that's all I needed to listen to.
That's
It
great.
did teach me the basics.
Yeah, no, it was really good way of thinking about it. It's fun. Yeah, that's where I kind of like, oh wow, after I wrote my book, that's when I got into Profit First. And I'm just like, wow, this really works well together. I love it. It just makes it easy. That's just one strategy I use. And then there's other strategies that I use as well to look at where are you at? Like we want to look at all your where you're at in your business and we compare it to other businesses in your industry. How well are you doing? Are you actually above average, below average? Where are you in the standings so that we can really see where things need to change with your expenses or maybe not.
Hmm. Yeah.
Your
And, and
income, yeah, go ahead.
and I've always thought to myself, it's not what you could do today that matters. It's what can you do today and every day for the next 5 to 10 years is what matters. And with this system that you're preaching, it's a consistent game that you do get better at. Like you said, everything starts small, but you become more refined and it becomes more of a well-oiled machine,
Mhm.
ultimately creating a very strong cash flowing business that becomes a sellable asset if you desire to sell it in the future, whether it's
Yeah.
hand it off to your future generations, but you're building something that is very valuable to the world, and people out there would want to buy it if you ever deem that so.
Well, would you want to buy a business that has a lot of debt?
Right. Well,
No,
even if it has a lot of inventory or whatever,
yeah,
nobody cares, right?
that's
It's
right.
all about the cash flow, period.
Exactly. If you can't sell the inventory stuck in that warehouse, why are we having it? Why we need to get rid of it. Even if we sell it off at fire prices, at least you got cash in the bank then from it. So really look at how can we keep that cash in the bank or just running through all the time so that you have money to pay for or maybe get an opportunity to bring in someone like yourself to, hey, train my staff to do podcasts. This would be great. If you are able to do that because you have cash and you're that's amazing. Opportunities will only show up, and you want to be prepared to take those opportunities. And if you don't have cash to take advantage of those, it really sucks. I
Yeah.
don't know what else to say.
Yeah, I think it's Warren Buffett, or I think it might have been even his mentor. But when there's blood on the streets, that's whenever you can really make some moves. And so,
Yeah.
having cash on hand, especially with this economy that we're going into and that we are experiencing now, if you have cash on hand, you can really make moves when other people are pulling out or they just can't do it. So cash flow is king 100%. Guys, that's
Mhm.
why I recommend get that down and focus on it. What you focus on grows. So the book is called The Courageous Entrepreneur: Cash Flow Strategies to Build Resiliency in Your Business. Is there a website or a social media channel that you're quite active that
I
people can reach out
do,
to you on?
yeah, I do have renetlegace.ca, and that's my website. And it's tied to a blog and a few other things, but I have done a little bit with YouTube, but not a whole lot.
Got it. So Renette, that's Rinettee, Lagace, Lagace. Don't make the mistake that I did where it was Lagaci. That's I mean, I kept thinking of that as soon as I saw it. So
Sounded better. It's all good.
so you're in Canada, is that right?
Yes, I am.
Okay. Are you rooting for Edmonton Oilers at all for the Stanley Cup? Do you care at all?
Absolutely. I really hope
Oh,
we can
okay.
pull a few a few games out. Come on, buddy. It's like, oh
Y-
my gosh.
I
So
was wondering. I figured this is the first time the Canadians a Canadian team is in the cup. I think in many years. So
oh
it's got to be going crazy for you guys out there, huh?
yeah, yeah. We were hoping it would have been the Canucks because I am in Vancouver, but
Oh, I was really
I
rooting
know.
for the Canucks. I will tell you, I like the Canucks this year.
Yeah, it was unfortunate. Well, anyway, thank you for having me. This has been fantastic.
Yeah, I like talking with you, and what you're preaching. I truly believe in it with the profit first technique, and obviously focusing on cash flow. So, guys, reach out to her if you need anything. Look her up, get her book, The Courageous Entrepreneur, and remember, $1 million book will lead to $1 million life. Right
Yeah.
on.